Hall Street Limited, indirect taxes. Very few indirect tax changes were announced in Budget 2013. However, it remains a key issue for business. In this section of the presentation, we're going to highlight some of the main risk areas and opportunities for you to make VAT savings. Let's start with a quick State of the Nation address. The standard rate of VAT is now 20%. That means that from 2015, the basic rate of income tax and the standard rate of VAT will all be the same. So VAT now very much sits at the top table and is part of the mainstream when looking at tax. Coupled with this, there have been a number of recent announcements where reliefs that were generally available for VAT have been withdrawn or eroded in some way, so the tax base is getting greater. In addition, HM Revenue and Customs are now proving quite difficult to deal with in a number of cases. How do you survive in this climate? The following presentation should help you to do this. Let's have a quick look first of all at the key changes which were announced in the budget. The usual changes on booze, fags and petrol were announced, of course. You should refer to your tabloid of choice if you want to know more details on these. In terms of VAT registration, the annual limit went up from £77,000 to £79,000, and in terms of being able to cancel your registration, the limit went up from £75,000 to £77,000. Fuel scale charges were also subject to what Customs have referred to as revalorisation, which essentially means that they have been increased. And this process is now going to become automatic on an annual basis. There will be a link to the new charges on our website. Increases were also announced to air passenger duty, climate change levy and landfill tax. So the overall indirect tax base is getting greater all the time. The budget also announced some future changes. The place of supply rules will change with effect from 1st of January 2015. Essentially, this will mean that there will be a one-stop shop for business-to-consumer supplies of telecommunications services, broadcasting and electronic services. Effectively, this will move the place of taxation to the country where these services are consumed. The long-standing exemption for research between eligible bodies, essentially university to university and similar organisations, is set to go from 1st of August 2013. In contrast, Customs announced a proposed exemption for for-profit supplies of education, which are currently standard rated, but have said that further consultation will be needed before this change can be introduced. The budget also announced a consultation on a review of the retail export scheme, which it is to be hoped will make this a little bit more streamlined and easier to use. There has also been a consultation on zero rating of exports via non-UK established UK VAT registered businesses. The details of this are awaited. And Customs also announced proposed regulations to allow manufacturers to reduce the VAT they have to pay to reflect certain refunds that they make directly to the end customer. Again, further details of this are awaited. So let's look now at how you might be able to save VAT in your business. For a long time, the fashion in VAT was to look at retrospective reclaims, in some cases going back to 1973. But the door has now been closed on these, and we're much more in an arena now where risk management is the main theme. Retrospective claims are still possible, and there are still opportunities, but new claims are generally capped at 4 years. VAT has never been a bigger risk to business, and so you need to think carefully about how you manage this. In the following section, we'll look at some old faithfuls, ideas that have been around for a long time, some new ideas which have arisen mainly as a result of case law decisions, and just some ideas on how you can be careful out there to protect your overall VAT position. The opportunities we'll look at are designed to enable you to pay as little VAT as possible and as late as possible, and to claim as much VAT as possible as quickly as possible. So how do you reduce the burden of output VAT? There are a number of simple things you can do here. Check the liability of all new products and services, and be aware that there may have been changes in legislation which can alter the rate of VAT that you have to pay. It's worth doing this on a regular basis in all business sectors. In terms of timing of VAT, there are a number of simple tips that you should look at. In some industries, it's possible to issue requests for payment in advance of VAT invoices, and this defers the time at which VAT becomes payable. There are also a number of special schemes for small businesses, for example, cash accounting and the flat rate scheme, and these can also generate significant savings and benefits. Don't forget bad debt relief. If you have bad debts that are more than 6 months old, it should be possible for you to get the VAT back on those, and again, this can help with cash. Let's now look at input VAT. What can you do here? In some sectors, your supplier shouldn't be charging you VAT on certain goods and services. If you think this is the case, it's well worth challenging them to make sure that they are applying VAT at the correct rate. It's also possible to advance the time at which you can claim VAT using an accruals basis. In some cases you can do this on an estimated basis, which can significantly improve cash flow. If you are in a sector where you can't recover all of the VAT on your costs, review your recovery method regularly. It may need to be changed to reflect changes in legislation or changes in your business practice. If you're transferring or restructuring part of your business, look carefully at the transfer of going concern rules, as these can significantly improve cash flow on the deal. Let's move on now to look at some current reclaim opportunities which are in fashion at the moment. For retailers, there is a potential opportunity to reclaim VAT incorrectly applied on postal charges. There are some significant savings to be made in this area. The rules on overseas business entertainment changed a little while ago, and you can now reclaim VAT on these costs for a period of 4 years. If you've incurred VAT overseas, i.e. non-UK VAT, it should be possible to recover this from the tax authorities in the country concerned. The process for doing this has become considerably easier recently, and it's well worth looking at this area. For those who are in the exempt or non-business sectors, the new cost-sharing exemption, which came in last year, is also a significant opportunity to make savings, although it's not an easy one to implement. Do make sure that you're getting maximum relief from the zero and reduced rates of VAT. There are a number of areas where this is significant, for example, property conversions, where the VAT savings can be very significant indeed. Finally, let's look at managing your overall VAT risk. Why is this important? Again, the headline rate, at a high of 20%, makes this a key issue. Secondly, the complexity of the VAT regime makes it very easy for errors to arise. Thirdly, the pace of change in VAT can be extremely fast and can be driven by case law decisions which happen all the time. HM Revenue and Customs' attitude is also important. They are on a mission to try and raise the amount of revenue. Many areas of the legislation are still open to interpretation, and there is also now a severe penalty regime which is beginning to bite. How do you manage VAT risk? Well, there are a number of things you can do here. First of all, ensure that your basic compliance requirements are met. Make sure you're registered when you need to be. Make sure you submit your returns and payments accurately and on time. But further than this, you need to document your processes and procedures. We recommend that you review these regularly, at least on an annual basis. Consider the impact of any changes, either internal within the business, or external, legislative change for example, and do this before the event. It's much easier to plan in advance than to unravel things afterwards. And finally, do engage proactively with HMRC. You're much more likely to get the result you want by doing this than by waiting for them to come knocking at the door.